Today we're going over everything that you're going to need to file your taxes this year. If we're just meeting, my name is Anthony and I help you to not be dumb with your money. So to help you be a little bit smarter today, let's get you prepared to file your taxes. If you're watching this video pretty much when it's being published, you still have time to file your taxes because the tax deadline was extended to May 17th. But the IRS really only cares about three things: whether you're married or not, how much money you make, and how much money you spend in a government sanctioned way. So let's break that down. You don't really need any documents to show whether you're married or not. There's just going to be a box on your taxes to check whether you are married filing separate tax returns, married filing a tax return together, single, or head of household, which means you make all the money in the family. But after that's all sorted, you're going to need to say how much money you've made. And there's actually quite a few documents that you might be forgetting about if you haven't done this before. The main income documents are going to be from what your main hustle would potentially be. So that's either going to be a W-2 or a 1099. If you're employed somewhere and they take taxes out of your check for withholding and you get some sort of benefits, you're more than likely going to be getting a W-2. That's going to be mailed to you, or you're going to be able to find it on the company HR website. But make sure that if you worked for any companies over the past year that you have W-2s from all of them. For instance, I changed jobs last February, so I had 2 W-2s that I had to file this year. You'll get a 1099 if you did contract work, so think freelance or gig economy. You should receive this in the mail, just like most of these documents. However, if you don't have it, you can always reach out to the HR department of whatever company you contracted for. All of these next documents you'll be able to find on their respective websites for whichever company it is that you have these accounts with. But these are going to be mostly related to banking and brokerage accounts. Your 1099 INT is just a breakdown of how much interest you earned over the past year, and you're only going to get one of these if you earn $10 or more from whatever institution it is. A 1099 div or 1099 dividend will come from any brokerage accounts that you might have had where you had stocks that paid dividends. So if you had a stock purchase plan at your job and they paid dividends, then you're going to receive a 1099 div from them. Or if you just have general brokerage accounts like a Robinhood account, you might receive one of those if you received any dividends because that's counted as income. A 1099 MISC or miscellaneous is kind of a little bit of a catch-all for these organizations, because if you didn't receive income that was dividend income or interest income or something else that we're going to talk about, then you might have received one of these. I got one of these from Yada Bank, which is a bank that I really like for my high yield savings account, but that's because they pay their interest in the form of prizes rather than actual simple interest. You might get a 1099-crypto, which is just what it sounds like. If you have any cryptocurrency that you've bought and sold over the past year, these companies might be required to send you one of those. If you don't get one of these and you still have bought and sold crypto, you might have to report that yourself just by going through all of your trades and showing how much you bought it for and how much you sold it for. So if there's any gain or loss, you can either pay taxes on it or write it off as a loss. There's also something called a 1099-R that I just learned about this year, which is only going to be applicable to you if you did a rollover in an IRA, either because you had a 401k that you moved into an IRA from a previous employer, or you moved a traditional IRA into a Roth IRA. If you don't know what I'm talking about, you don't have to worry about this. You might get a 1099-B, which I don't really know what the B stands for, but it's basically when a couple of those are mashed together in one form. For instance, I had accounts at SoFi this past year, and I had 1099 divs, 1099 miscellaneous, and 1099 interest from them, and so I just had that all together in one big 1099B because it just makes their filing life easier and your life easier because you only need one document instead of 3 or 4. The last thing that you might need when we're talking about income is a Schedule C. Now, the scope of this video is really only for personal taxes, so we're not really going to be getting into too much business stuff. But if you are self-employed and you don't have a corporation or an LLC, you're likely operating as a sole proprietor, which means that you're going to have to fill out a Schedule C. This isn't a form that you get given. You just fill out your total revenues, any expenses that you can deduct from that revenue, and then it'll spit out how much you have to pay taxes on. If that sounds a little daunting, you can always go online to any of those tax preparing websites or just visit a tax professional and they'll be able to help you out with that. Now, the next thing that you're going to need to get together is documentation showing if you've spent any money in a government sponsored way. These are your tax deductions. And this can get a little bit complicated, so if you have any questions about this, or if you make above $80,000 to $90,000 a year, you might want to talk to a tax professional about this because you might itemize your deductions rather than taking the standard deduction. But I think most people watching this video are like me and not making bank yet, so we're just going to go over what generally everybody should have to worry about. So the government likes investing in small businesses, giving money away to nonprofits, as well as investing for your retirement and your health, because these are all the things that they don't want to have to pay as much for. So they sponsor you to do them yourselves through write-offs on your taxes. You're going to receive a form 5498 for any IRAs that you have. This can be found on your IRA website like it was for Fidelity for me, but if you haven't invested in an IRA yet for this past year and you would like to because you either want to get a little bit of a deduction or you want to invest more for your future, you can still invest in last year's IRA up until tax day on May 17th. If you do contribute to a Roth IRA, which is what I recommend, you're not actually going to be getting any tax benefits this year because you're going to be likely getting way more tax benefits down the road. If you contribute to a traditional IRA or an HSA, a health savings account, you will be able to deduct that on your taxes. Either way, it's a good idea to report how much you've invested in your IRA, because if the IRS doesn't see any contributions over the next 30 years and then you retire and you start taking money out of your Roth IRA, that might be a little bit of a red flag for them. If you have been generous this past year, like donating to your religious institution or even clothes or stuff to Goodwill or any other type of giving to a sanctioned nonprofit, you can actually deduct that on your taxes. And you're gonna end up receiving something that looks kind of like this, which will show you the dates of when you gave and how much you gave over the course of the year. Now, normally you wouldn't be able to write any of this off because there's something called a standard deduction, which if you make less than the numbers that I said before, probably makes more sense for you to claim on your taxes just because it's going to end up saving you more money. But there was a new law that was passed last year that actually makes it so that you can deduct some of these charitable expenses. And I made a video about that last week, so if you haven't checked it out, watch it over here. Oh, and one other thing that I found out this past year is that you're actually going to need to mark whether or not you got your stimulus check. You don't have to pay any taxes on this, but this is good for you if you haven't gotten those yet, because if you file this year's taxes and you haven't gotten your stimulus checks yet, then that means you're going to get your stimulus checks based off of this tax return. If you have any questions, I'll do my best to answer them or point you in the right direction, but I'm not a tax professional, so I'm just giving my opinion on all this stuff. But if you're new and you want help continue to be smarter with your money, definitely subscribe and like this video if it gave you any value. Otherwise, just watch this video and I'll see you there. Peace.